Google announced that their $150 billion a year in free cash flow is not enough. They need to raise some capital through selling shares. Google was down 4% yesterday. It's down 1%. We're filming right before the market opens. It's down for like 5% since that announcement. And they've just been burning through cash.
We got Google. Google just announced something crazy. We're going to talk about that. NVIDIA unveiled Vera. The crypto market's crashing. Michael Saylor selling Bitcoin. We got a lot to get into today. So
the crypto market is cooked. I've lost a lot of money.
Yeah.
It's over.
Let's start with the most recent news. Sam, you want to take us through what Google just recently announced? The 80 billion?
Yep. So Google announced that their $150 billion a year in free cash flow is not enough. They need to raise some capital through selling shares. So they announced that they're going to raise $80 billion, $10 billion coming from Berkshire Hathaway, $40 billion from at the money offerings, I want to say. And then I don't know where the last little bit is coming from, but basically they're selling a lot of equity to go put it into AI CapEx, which is interesting. Wall Street didn't really like it. Google was down 4% yesterday. It's down 1%. We're filming right before the market opens. It's down for like 5% since that announcement. And they've just been burning through cash. So they just a year ago, they had $95 billion in cash and $11 billion in debt. Now they have $126 billion in cash, but $77 billion in debt. So they burned through like $35 billion in cash if you account for the debt that they've raised too. And then they've made, I think it was $170 billion in operating cash flow in the last year. And then they've also raised, so this is like selling bonds, this debt that they raised. And now they're also selling shares as well, 80 billion. So add that all together, it's like over $200 billion that they're throwing into AI. I think they're going to outspend Amazon from what Amazon said in the past. So a lot of people don't like this. They think that this company should be buying back shares. It's a highly profitable company. But yeah, I have thoughts on it, but I'm curious what you guys think when you hear this.
Yeah, I think it's weird, honestly. Not particularly weird, but I do think it's a signal that stuff is changing, right? Because usually whenever these start, I think, has there ever been a company this size sell shares to raise money? Ever?
No.
I don't think that's ever happened. Not with like a mega cap. I don't believe so. I can't think of one at least. And I almost wonder if it starts to show like a sort of change of tide for the way that these companies do start financing some of these like capital expenditures. It's like, do you start to see similar companies like, do you start to see Amazon take a similar approach? You know, this is kind of what it was. It was one of those things where I was like, I don't really care that they're doing it personally, right? Because I'm also not someone who holds directly, and they've performed extremely well. So they can get away with stuff like this. I feel like if your stock performs well, you can, in theory, just dilute people and be like, well, look what we've been spending on. It's raised your overall equity. Don't be mad at us. We're doing what we need to do. Obviously, I don't think like a Meta could do this right now. That would be bad because like the price isn't performing well as it is. But I think it kind of starts to reshape the way that some of these mega caps are financing this. And it wouldn't shock me if you see more people, more companies of this size follow similar paths and then just spend more on AI. That does scare me a little bit though, because it's like, what if they start overdoing it? You know, is that where you start to see all of these mega caps just selling off a ton, diluting their holders a ton, spending a bunch of money on this thing, and then this thing possibly slows down at some point? And then it's like you just got massively diluted and the return on that wasn't super great. I don't know. But all in all, I don't think it's a bad thing like a lot of people do, but it definitely does make me question how far this goes. But I think that's only what, 2% or like 1.8% or something of Google's market cap. It's not that much. It's not that bad. But yeah, anyway, it's interesting to say the least.
I have a question about Berkshire Hathaway. Like, is this a changing of the tide? Is this like them? Because Warren Buffett recently stepped down, right? Which is making, like, I actually hold Berkshire Hathaway. I hold it as a hedge against my degen nature. But is this like a changing of the tide? Like, is my hedge now at risk because they're willing to invest into Google doing AI? Or is it not as plain as that, as plain as it sees? Like, is Berkshire investing into Google here so they can build their AI? Or is there something I'm missing?
100%. I mean, that's in theory, that's exactly what they're doing. I mean, I think it's not a full changing of the guard because at the end of the day, Google is so diversified that it's like it's Google. You know what I mean? It's not like they did this with like an AMD or a Micron. And also, I think Berkshire got up to nearly like $500 billion in cash at one point. If we're talking about 10 billion, it's not that much. What was weird is the fact that they didn't even get like a good discount on it or anything. They kind of just took it. And so it definitely shows they're taking more risk than usual, but I don't think it's that big of a risk, to be honest. I'd be curious to see if they keep going. That's kind of what this whole news was to me, is one of those, does this start a domino effect of a bunch of other stuff happening, like other mega caps starting to raise in this way, and then Berkshire taking more risk? And is Berkshire taking a risk like this a top signal? I don't know.